Hi everybody, I'm A Bissen, and today's topic is 1099 loan programs. If you're an employee, a contractor, or a salesperson, for instance, whose employer is paying you in 1099 wages, and you've had troubles getting a traditional home loan from your bank or credit union, such as a conventional loan, a VA loan, an FHA loan, or USDA loan, or a jumbo loan. If you've had any troubles in those directions getting qualified, I want you to stay tuned because first of all, you're not alone. And second, the good news is that there is a program designed specifically for your needs. It's called a 1099 program. In this video, we're going to be covering what a 1099 loan program is, right? Who's the ideal candidate for this. We're also going to cover how the program works, including how we calculate the income needed to determine your ability to repay the new note, as well as a few other types of details that you're going to want to know in order to make a decision on whether this is the right program for you. Without further ado, let's get started. Okay, on a 1099 program, the ideal candidate is anybody who is working for an organization and is paid 1099 wages. 1099 basically just means that the employer is not withholding from your paycheck. You're getting the flat paycheck, and then it's up to you when you go to file your taxes to determine what your actual taxable income is. Okay. In the eyes of most lenders, for a traditional loan program, you're viewed as the business owner because of the way you file your taxes, because your income can fluctuate with however you actually file your tax returns. And under a traditional loan program, under these types of rules, if you are the type of person who has an accountant that, for instance, expenses away most of your income in order to lower your overall tax burden, that may work for you. However, when you go to apply for a traditional home loan, unfortunately, a lot of people run into troubles. So the old adage is, if you tell Uncle Sam you're broke, when you go to apply for a home loan, you will also be considered broke, all right? But that's exactly what the 1099 program is. All right, so how does a 1099 program work? Well, actually, it functions just like a traditional home loan with one distinct difference, and that's how we calculate your income, okay? Unlike the traditional program where we're going to be looking at your taxable income on your tax returns, we're going to be looking at it from a different viewpoint, all right? We're going to be looking at your 1099s, and then we're going to make a determination from there. And here's how we do that calculation. First, you're going to provide us with your 1099s for the most recent 2 years for the same employer. Now, if your employer also gives you pay stubs that include your year-to-date earnings, then we'll need that too, but most actually don't. So we just reach out to the employer and we ask them to provide a statement showing your year-to-date income. We'll also need a letter from your employer that states that you have no mandatory job-related expenses. So at this stage, we're going to be using 50% of your actual income. Now, chances are your expense burden is quite a bit less than 50%. So in that case, we can accept a letter from your CPA or tax preparer that states that your expense burden is lower than 50%. It can be 30%, 20%, 10%, but let's give an example. If they write a letter stating that your expenses are 20%, then we can use 80% of the income. If they say that you have an expense ratio of 10%, then we can use 90% of the income, and so on and so forth. All right, let's look at an example. This is Amber. Amber makes $65,000 at her job. Now, when she went to file her taxes, her tax preparer prepared the return with a bunch of deductions and expenses that reduced her taxable income to $20,000. So she went to apply for a traditional home loan and she was denied because $20,000 was simply not enough income to purchase the home in the price bracket she was looking to purchase in. Now, under our 1099 program, she was actually able to qualify. We were able to use $58,500, and the reason we were able to do that is because her tax preparer prepared a letter stating that she had a 10% expense ratio, allowing us again to give her 90% of her 1099 income, which came out to be $58,500. And now she qualifies. Okay, so let's cover some program specifics so you can get to know the program better and make a determination if this is right for you, and if it isn't right now, maybe it'll actually give you the ability to start planning ahead. So the minimum down payment for this program is 10% of the purchase price. All right. In order to have a 10% down payment, you should know that you need a middle FICO score of a 660 or greater. The minimum FICO score to qualify for the program is actually all the way down to 620, although this will affect your down payment, okay? So if you want to purchase with a 10% down payment, you need to have a 660 plus credit score. If you want to have a 20% down payment, then you'll need to have at least a 640 to a 659 middle credit score. And if you have a 30% down payment, then you can have a FICO score from 620 to 639. The occupancy for this program will cover owner-occupied homes, second home or vacation homes, and investment properties. Eligible property types include single-family homes, townhomes or villas, condominiums, multifamily homes such as a duplex, triplex, etc., or even condotels. There's no prepayment penalties as long as you're using the home as your primary dwelling, or if you're using it as a vacation or second home. There may be a prepayment penalty if your intention is to use it for investment purposes, so be sure to check with your loan originator for those details. There is a reserve requirement. Now, reserves is basically meaning that you've got money saved away for a rainy day after closing. After the down payment and the closing costs have been paid, we want to make sure that you have at least 3 months worth of the new monthly payment. That includes principal, interest, taxes, insurance, and any association dues, broken down to the monthly level. We want to see that you've got that somewhere in your savings. You can get interested party contributions. Sometimes those come from builders, they come from sellers, they can come from a realtor, but you can accept up to 6% of the purchase price to use towards your closing costs. Gift funds are acceptable under this program from a family member, but you do need to demonstrate your ability to make at least a 5% down payment on your own. And this loan carries no PMI or private mortgage insurance, even if your down payment is less than 20%. And there you have it. That's a 1099 loan program in a nutshell. We hope you find this information helpful and insightful. And if you'd like to discuss your scenario with us and ask any questions, we'd love to speak with you. If you're looking to purchase, get pre-approved, or refinance your home anywhere in the state of Florida, we'd love the opportunity to assist you. And remember, just because a bank told you no, doesn't mean that you can't get a loan, okay? So stop letting these banks tell you no when we have more reasons to say yes. Thanks again for dropping by. I'm A Bissen, and this is Unconventional Lending.